Hey people. So I talked to my business owners yesterday. For those of you who are just joining, welcome to my page. This page is about building wealth through the United States tax code because the tax code is where the wealth lies. Okay. If you ever don't know what to do with your money, look at how the tax code treats the transaction. Okay, so I don't move outside the tax code. For those of you who are new to me, I am the Moneynista Natasha Varela, 19 years in audit, accounting, and tax, 13 in the large business and international division of the Internal Revenue Service. And so I'm about to piss a lot of people off with this, but these are some hard truths. Single family home ownership, owner occupied, is not a real way to build wealth. Okay, I was a single family homeowner. I know a lot of people are emotionally attached to the idea, but let's look at it from a wealth building standpoint, which is the United States tax code. Okay, so the Tax Cuts and Jobs Act increased the standard deduction. That's the deduction you get based upon your filing status, right? And for the most part, it eliminated the benefit of your owning your own home on the tax return, right? Your Schedule A, your mortgage interest, and your property taxes, which were capped, right? And a lot of people don't get any benefit on the tax side, right? Who purchase for primary residency, right? As a single family. And I'll get a lot of, but there's appreciation, right? And it's better than paying rent. So here's the deal. And I want you to lean in because this is boardroom talk, right? I've been doing this a while. I've spoken to people who have millions upon millions, right? I've audited their financials, their tax returns. It's never going to get you anywhere if that's your end game. Okay, moving within a tax code is going to get you very far, right? Appreciation is phantom, right? I'm not saying don't hope for the best, but appreciation is phantom. What does phantom mean? It's out there in the air. It's intangible, right? Your house is worth nothing until you sell it. In accounting world, which is, we deal with what is, your house value, it's not recognized until realized. Those are accounting terms. Recognized, we don't care about it until it's realized in our bank account. So my condo was worth like 700, 720, but I didn't realize that, right? Things happen. And so as an investor, right, I'm going to talk from the investor side. The tax code does things way different. Okay, not only do I get to take my mortgage interest on my properties, I get to take property taxes that are uncapped, right? I get to take depreciation, which is basically a cost allocated to you each year for the use of the house, because it's an asset placed in service. It's a business now, right? That offsets your rental income, right? You just get it. You don't have to pay it. You just get it, right? It is the gift for being in business. And then bonus depreciation, which is exactly what it is, bonus, right? So bonus depreciation a lot of times can end up being, anywhere from 60, 100, $120,000, right? So I have a property that I purchased. I'm on my fourth one this year. And one of my properties I purchased, I got about $115,000, $120,000 in bonus depreciation. Okay. And that is on top of my regular depreciation that I'll get every year, which is about $23,000 or so, right? And that's a lot. In depreciation alone, right, this creates this huge paper loss. It's not a real loss, it's a tax loss, right? I still have my cash flow, right? And all that loss does is offset the taxes on my rental income, right? And then for being a real estate professional via IRS standards, you do not need a license. Okay, you need to meet certain requirements. Again, go ahead and click the link in my bio. Join the free live training. September 15th is the next one, 8 p.m. Eastern Standard Time. So I get all this loss, right? This is just from one property now. I'm going on 4, right? This year alone. So I have maybe $60,000, right? Just in depreciation and bonus depreciation. That's an expense, right? I don't pay that. I don't pay $160,000 to get that expense. It's just given to me because I purchased a property for rental use. And that's not including my mortgage interest, my property taxes, insurance that I get to also include, right? This creates this huge loss. And so as a real estate professional, now I get to take those losses and offset all other income, not just rental income. Okay? A single family homeowner, primary residence doesn't get any of that. You get no more benefit on your tax return than a renter does, right? Because your standard deductions are greater than your itemized. Okay, your appreciation is phantom. I get my appreciation in the form of my depreciation, which means I recognize it in real time, right? That expense goes on my tax return this year, and that expense offsets income this year. That means what income I make, I keep. It's in my account. It actively offset income this year. So I realized this appreciation in my property via depreciation, and I didn't have to sell. And I get my cash flow untaxed, right? And as a result, I live housing cost free. So I'm tax free, and I don't have a housing cost, right? That's how the tax code works, and I'm trying to get you guys to understand that, right? Fight me in the comments, do what you want to do. I'm actually living it. I'm actually teaching it, right? This is what it is. This is the United States tax code. Okay, Section 469, passive activity losses, which is real estate, right? And then your real estate professional status via IRS standards, which makes those passive activities now active, which means now you're offsetting more than your rental income with this faux loss, right? It's fake. You know, it's not, your property is really not depreciating. It's just creating this loss, right? You get to offset all your income via bonus depreciation. Now I'm going to be on property 4 this year, totaling 6 total, right? And the 4 that I purchased this year, and if you want to learn more about bonus depreciation, again, click the link in my bio, join the free live webinar, go on my YouTube, there's a bonus depreciation video there, and how it affects your tax liability. It's huge. It is huge. And this is the last year for 100% bonus depreciation. And I explain that in my webinar and in the YouTube video and in my courses. I go very much into detail in the courses. Okay. So for those of you who have already purchased property, but you never took bonus depreciation and you fit certain rules, even next year, you can still claim your bonus depreciation if your property was placed in service, and acquired and placed in service in the dates for 100% bonus depreciation. It starts to phase out to 80% next year, and then the following year 60%. And I explain that, but for right now, I get 100% of items expensed that create for my properties about maybe $350,000 to $400,000 in these losses, right? Coupled with depreciation, that will offset my rental income. That will offset any income, right? Business income, consulting income, ordinary income, because I meet real estate professional status. So for those of you who are open and willing to understand actual facts, right, about wealth building, go ahead and join the free live training. Okay. I will never encourage activity or co-sign activity that is not wealth building within the tax code. The tax code will tell you how to build wealth. That's exactly where it is. That's the blueprint. Okay. That's the blueprint. If I don't know what to do with my money, I look at how the tax code treats the transaction. Okay, the tax code treats real estate activities as far as investments, rentals, right? Landlording and business ownership significantly better, right? Your W-2 is like the stepchild. Okay, it gets no good treatment. Your single family home, it gets no good treatment. And again, argue in the comments, oh, I hate this comment, but the facts are the facts, right? The tax code is going to give you the blueprint. The tax code treats your rental activity much better than your primary residency, your single family home ownership, primary residency. You won't get no benefits. Okay, and again, you can hope for the best with appreciation, equity, all that good stuff, but it doesn't really build. Okay, it doesn't really build substantially. It is not a blueprint I would give a novice. Okay, if they really wanted financial freedom, because your single family home is dependent on an external source of income, which is your job. Okay, my rentals are dependent on my tenants and their jobs. However, I utilize renter guarantor insurance, so all of my tenants are under renter guarantor insurance. Should they default on the lease, they're evicted, and I get paid out any back rent, legal fees, and any rent that is left on their lease if there is. So I'm never really at a loss, and as a good investor, I always have reserves. Okay, so I never fret about things. I never look at the bad side because I'm an auditor first. I talked about audit prevention, right? Detective versus preventative. I'm always preventative. My tenants are under rental guarantor insurance. By default, I get tenants that are of the best quality. Okay, so I hope this was insightful for you guys. I just wanted to give you the hard truth about home ownership in this American dream, right? I will purchase a single family to live in, right, when I'm ready, and I can now that my cash flow can pay for it. I don't have to pay for it. All right, so I hope you guys understand. I hope you guys join. I really want you guys to understand the impact of being an investor versus just a homeowner. You're missing out on a lot of money, and your CPA is not a tax strategist. A lot of them are prepared. A lot of them are not knowledgeable and well versed in certain things, and they don't have to be because nobody really ever comes to them for that. They just come to them to prepare. They don't go for tax advisory services, and even if they did, again, they're not tax experts. So just keep following. Go to the YouTube, check out Mortgage Depreciation. Click the link in my bio. I want to see you guys there Tuesday, 8 p.m. Eastern Standard Time. And I want to educate you guys on how to move, right? It's no fun if I can't share it. Bye.